All right, by the way, let's take a look at Canadian stocks on the back of President Trump and Prime Minister Trudeau's news conference. Here now to discuss is your Trading Nation team. Ari Wald is with Oppenheimer, Erin Gibbs with S&P Global. And you know, Erin, it's funny because we've talked a lot about Trump, we've talked a lot about trade, we've talked a lot about taxes, a lot of T's there. What we have not talked about, though, is that the Canadian stock market has done better than the U.S. stock market. Do you think it will continue to do so?
So there are a couple things just to start this off about the Canadian stock market that are really different from the U.S. And first thing is that energy and materials are about 3 times the weight that they are of what we have in the S&P 500. So it's very much about energy and materials, as much as we want to talk about border taxes and so on. One of the things that is up for discussion is that Keystone Pipeline, which could actually be a good thing for Canadian stocks. And as long as energy prices remain fairly stable, we're positive. Plus, valuations look pretty decent here. They're not at peak valuations like we see in the U.S.
So are they still, though, a good value, Erin, do you think?
Yeah. For the past since November, they've stayed in a really tight range. As long as it tends to stay below 18 times forward earnings, that's a solid entry point for the TSX.
Okay, Ari Wald, let's go ahead and I don't know if we've ever actually charted the TSX, the Toronto Stock Exchange.
I'm sure we have.
Let's go ahead and do this, Ari. How does it look?
The charts are bullish, Brian. What's really notable here is that you have a fresh breakout in the chart, in fact, that would signal to buy the index in anticipation of additional gains. What you'll notice about it is that the index is really round-tripped from where it was back in the summer of 2014. After a pretty deep sell-off, we're right back at those levels, pushing out to new highs, breaking above that resistance. We think it gets through. I think this is marking the start of a sustainable advance again. We say that because you'll look at the 200-day moving average on the index. It's rising. That's indicative of a bullish trend. There is some catch-up potential here, too. You consider that the S&P 500 is well above its levels from the summer of 2014. So we think the play is the buy pullbacks, buy it now.
Okay.
You're going to see higher lows followed by higher highs. I think this is really also all within our more macro thesis that global breadth is broadening here. So bullish Canadian stocks, bullish equities in general.
Oh, Canada. Erin Gibbs and Ari Wald, thank you very much. Good look there at a market that they like. For more Trading Nation, go to our website, tradingnation.cnbc.com.
Fluctuating commodity prices can impact more than just energy and material stocks. For example, lower oil prices might bring down transportation and packaging costs for many products and companies outside the energy complex. So when you invest in a particular sector or industry, keep a close eye on commodity prices and what they might mean for your investments.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.